Whenever you search up economical news or content, most of the time you're led to American news. But how about our northern neighbors? It is safe to say that I have finally picked up some Canadian content and we are ready to break it down. We have switched our Wall Street for Bay Street, and we're ready to beat the Canadian banks. The author explains Canadian investing basics, and if you yourself are getting into this financial world, then for sure watch this video. Just remember, it's never too late to start learning. I will break down Beat the Bank by Larry Bates. In a world driven by complex financial systems, where fortunes are made and lost at the blink of an eye, there exists a persuasive sense of unease among everyday investors. The allure of the stock market, the promise of high returns, and the whispers of financial independence have captivated millions. You are on a journey through the captivating world of finance, where one man dared to question the established norms and challenge the very institutions that claim to protect our investments. Larry Bates, a former banker turned financial crusader who has spent years unraveling the mysteries of the financial industry. The time has come for us to take control of our financial destinies. We must question the narratives presented to us, dig deeper, and demand transparency. In a world where financial institutions often take advantage of their customers, it is essential to take control of your investments. The best investment you can make is an investment in yourself. Canadians, like many others, face numerous obstacles when it comes to understanding their investments. Let's examine some of these challenges. Unconditional trust. Many people place blind trust in financial advisors and institutions, assuming they have their best interest at heart. As well as erroneous assumptions, investors often overlook fees, failing to recognize their impact on their overall returns. That is paired with lack of knowledge. Without proper understanding, investors are unable to ask the right questions and make informed decisions. Paired with fear and disinterest, the fear of asking dumb questions or seeming impolite prevents many Canadians from fully engaging with their investments. Many Canadians struggle with limited time. With busy schedules, people often neglect to dedicate time to comprehend their investment products and services. Unfortunately, financial institutions capitalize on these circumstances, quietly stripping away a significant portion of Canadians' lifetime investment gains. But fear not, because you and only you hold the burden of responsibility to get your investment right. Here are 3 key elements of simply successful investing. Learning the investment basics. Educate yourself on the fundamentals of investing to make informed decisions. Thinking long-term. Adopt a long-term mindset. Understand that investing is a marathon and not a daily sprint. Furthermore, it is important to minimize cost. Take steps to minimize fees and expenses associated with your investments. So what are the right steps to take in the pursuit of successful investing? Set up an investment account, whether it is a RRSP or TFSA. Invest in wealth-generating instruments such as stocks and bonds, or intermediate investments such as mutual funds and ETFs. If you choose intermediate investments, make sure to further invest in wealth-generating assets, such as stocks and bonds. The wealth formula is important to keep in mind, which encompasses 6 powerful forces that shape your financial future. The wealth builders in your life are amount, time, and rate. The more you save and invest, the more money you'll have. Investment is a time game, where more time allows for greater accumulation. And the higher rates of return lead to more significant results. On the other hand, the wealth killers are fees, taxes, and inflation. Fees eat into your investment gains, so it's essential to understand and reduce them. Taxes are inevitable, but there are strategies to minimize their impact. Lastly, inflation erodes the value of your money over time, making investing crucial to beat it. By understanding and managing these 6 forces in your life, it can build wealth and secure your financial future. Learning tactics of Old Bay Street, where financial institutions employ a pitch, plan, product, and prize design to gain control over your investments. The pitch preys on the confusion, overwhelm, and fear that individuals feel about their finances. Financial institutions position themselves as helpers, ready to guide you through the complex world of investments. Once they've captured your attention, the plan is presented as the solution to your financial goals. However, the plan often fails to disclose the full implication of your investments. The product pitch follows, as financial institutions push their products like mutual funds, which may not necessarily be the best investment option for you. Ultimately, Old Bay Street walks away with the prize, reaping the benefits while leaving you unaware of the true cost of their services. Old Bay Street secrets are exposed and reveal the dangers of falling into their trap. Remember, you get everything you don't pay for, so knowing exactly how your fees work is essential. While financial salespeople may provide advice, they also often make the same mistakes they advise against. So it is important to implement your own financial education. If something sounds too good to be true, it probably is. The more enticing a Bay Street product sounds, the higher the fee that accompany it. Old Bay Street disguises sales pitches as advice, leading to unsuspecting investors down a treacherous path. Moreover, the investment products Old Bay Street relies on often doom their clients to fail. There is hope beyond the grasp of Old Bay Street. You don't need to be an expert or engage in daily trading to invest successfully. New Bay Street opens up a world of possibilities, providing access to the same ultimate investment products at a lower cost. The author focuses on the world of stocks, unlocking the mysteries behind this popular investment instrument. Stocks can be grouped into various categories, such as geographical, industry-based, or company size. Blue chip stocks represent large, well-established companies, while speculative stocks lack the stability of blue chip stocks. Moderate risk stock lie between blue chip stock and speculative stocks in terms of resilience. Exchange-traded funds, ETFs, offer a straightforward way to invest in stocks. Index ETFs are low-cost stock funds that track specific indices, while active ETFs employ various investment styles. Canadians also have the opportunity to invest in American stocks, opening the door to a broader range of opportunities. Global investments are within reach as well. The author explores the world of bonds, providing insight into their stability and role in building and protecting wealth. Bonds may not be effective in generating wealth, but they excel at preserving it. A bond is essentially a certificate of representing a debt owed to you by a business or an organization, as well as maybe even the government. In return, the issuer repays the debt and pays interest on top of that at a predetermined rate. The author addresses the crucial mindset required for successful investing. Reacting to every market downturn is counterproductive. Being prepared for stock value to decline and avoid knee-jerk reactions are key to weathering market fluctuations. In the world of investing, having the right mindset is crucial. Investing is a long-term game, not a short-term sprint. It requires discipline, patience, and a focus on the bigger picture. Market downturns are inevitable, and it's important not to react impulsively when stock values decline. The book advises us to be prepared for such fluctuations, understanding that a decline from 20 to 30% is not uncommon. Instead of panicking, it is vital to stay calm and avoid making hasty decisions based on short-term market movements. Successful investors understand the importance of staying committed to their long-term goal. By keeping a steady hand and focusing on the fundamentals, they can weather the storms of market volatility and achieve their financial objectives. A solid financial plan serves as a roadmap to guide us towards our financial goals. The author outlines key considerations and provides different approaches to developing a plan tailored to our individual circumstances. The chapter emphasizes beginning with the end in mind. It prompts us to ask essential questions, such as the annual cost of retirement, the size of our retirement nest egg, and how much we plan to save to reach those goals. The book offers 3 types of plans to consider: the unplanned, the self-plan, and the fee-for-service plan. The unplanned suggests saving a percentage of our net income, especially when we're young and uncertain about retirement specifics. The self-plan involves crafting our own written plan and following through with it, while the fee-for-service plan relies on the guidance of a trusted financial advisor. There is a big importance of spending less than what you earn and establishing an emergency fund equivalent to 2 months' worth of living expenses. Selecting the right investments is a crucial aspect of successful investing. The author delves into various options and strategies available to investors. The book suggests a balanced approach to investment selection, combining stocks and bonds with a preferred geographic allocation. For example, 50% allocation to Canadian stocks and 50% to American stocks can provide a simple yet effective portfolio. If you desire international exposure, allocating 1/3 to each Canadian, US, and international stocks, or 40% Canadian, 40% US, and 20% international split can be beneficial. Additionally, the book introduces the concept of using exchange-traded funds, ETFs, for an easy and low-cost exposure to specific markets and sectors. Old Bay Street has a powerful grip on you, and the author advises to be wary of it. It is important to remember that you are not a stock market player. You are a business owner. We have learned that the best investment one can make is an investment in oneself. We encounter the challenges faced by Canadians in understanding their investments and the tactics employed by Old Bay Street. But we have also discovered the path to financial liberation through New Bay Street, where alternative investment providers and approaches offer hope and opportunity. Beat the Bank leaves us with a profound realization. The power to shape our financial future lies within us. By taking responsibility, educating ourselves, and making informed choices, we can break free from the clutches of Old Bay Street and embark on a journey towards financial independence and security. Remember, it is never too late to start, whether you are just beginning in your investment journey or seeking to course correct the time. Take control, invest in yourself, and embrace the principles of simple, successful investing. The decision is in your hand.